This is Alan Bush with the Daily Financial Forecast for Thursday, December 8th. Starting out with the stock index futures, first of all, we did see some new historical highs yesterday in the S&P and Dow futures. Also follow-through gains today with some additional new record highs in both of those indices. Much of the strength linked to President-elect Trump's infrastructure plans. Also, we had some gains, I believe, after Chinese economic numbers coming in quite a bit better than expected. These are in the form of trade numbers that were very good, so that contributing to the gains in stock indices. Now, normally, when the Fed is poised to raise interest rates, that would be a bearish factor for stock indices. But I think that is not the case now. An interest rate increase from the Fed is very much warranted by an improving economy, or at least prospects of an improving economy. So I think that stock indices will very much be able to weather the storm of a rate increase. In fact, our analysis suggests that we will see higher prices for stock indices through the rest of this year and well into 2017. Now, moving over to the currencies, the main news coming from the European Central Bank. Basically, they became a bit more accommodative in a combination of factors involving their quantitative easing program. So the euro currency under some pressure after the ECB meeting, this supporting the dollar index. So good gains in the dollar index today. Longer term, we do feel that the greenback will continue to advance, especially since the Fed is the only major central bank that is on track to raise interest rates this year or even into next year. Every other central bank is either in an accommodation mode or in a status quo mode. So interest rate differentials will remain very bullish longer term for the dollar index. Moving over to the interest rate futures markets, it seems that the bonds are very much underperforming the news with sharply lower prices today. Some of the weakness can be linked to higher stock indices and higher crude oil, but those influences are really not that much of a factor that should cause the bonds to decline over 1 full point. We do feel that the Fed, as is the consensus view, will raise interest rates at their policy meeting next week, the 13th, 14th meeting. Also, we do feel that there will be additional rate increases, possibly 1 to 2 more rate increases next year, all of which are bearish for the interest rate futures markets. Also, precious metals, which have come under pressure due to prospects of a rate increase from the Fed and a stronger dollar. I think we'll find some footing in the next few days. Once the Fed meeting is out of the way next week, I think we can start to see gold and silver begin a new up move. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.